Get to Joe Lavorgna, chief economist, SMBC Nikko Securities America, former chief economist at the White House National Economic Council. Kitty Richards, a former White House Treasury official and current acting director, executive director of Groundwork Collaborative, and our own senior economics reporter, Steve Liesman. And I'll bet you I could pair off any of these and get a really good argument started between any of these people. I'm pretty sure I can do that, but I'm not going to do that necessarily. Steve, let's start with you. Did Rick say anything that just galled you just now?
Yeah, just about everything, actually.
I knew that. I think Kitty too.
What I thought
Lavorgna was like cheering and clapping.
What I thought was most interesting was while Rick was talking about political conspiracy, the PCE core, for the GDP, ex food and energy, came in at 2%.
So the Taylor
and
rule,
the bond market, let me finish here. The bond market itself, without any political commentary at all from the Fed or anybody, yields actually fell. Okay, that's the market reacting to the data. The idea that somehow the Federal Reserve began to talk about lower rates in the absence of data coming in much better when it came to inflation, and not reacting to that. I mean, I think is the problem with it is that it ignores the facts and it makes up facts. So I'll just leave that there.
Oh, my God.
Oh, wait 1 minute. I want him to say something, folks, that on the price index and the core PCE, those numbers went across my screen as unchanged, and then about 2 minutes later and about 30 seconds ago, they came back down. So my apologies. I can only pick off the wires what's on the wires. So the 2.3 now all of a sudden became 2%, okay? And the 3.6 became 3.3. And I apologize. Well, it's true, okay? That's what happened. I'm just picking the numbers. I don't get this stuff, before it's released many other reporters do.
Joe?
Okay, where should I start?
You tell me. I don't know.
Okay, here's what I'll tell you.
And Kitty, you're going to come right after this.
I do have a lot of sympathy with what Rick is saying in the sense that Powell gave this talk at Spelman on December 1st, didn't even say we're talking about cutting. And then 2 weeks later, they had this massive pivot, which, by the way, as you know, I've argued for low rates for a while.
Yeah, you have.
But the timing was very curious. And the Fed's own forecast showed that their inflation outlook hadn't really changed much in 24. The headline number came down a tenth. Their forecast on the core came down 0.2, yet they had 30 basis points of extra easing. So something looks a little bit circumspect here. I do think the election is a factor, and politics, I think, was involved here. I can tell you that at least since 1984, the Fed has never begun an easing campaign during a presidential election year. They've started before the election year, but not during. And I wouldn't be surprised that part of it has to do with the fact that the further they start to talk about cutting and the sooner they start cutting in 24, maybe at the margin, they'll give them a little bit more political cover.
Wait, so you think it's political because they're trying to not be political?
I think that's part of it, yes. I think that is part of it. I don't think it's all of it, but I do think that enters into the calculation.
Lavorgna, you've been out there saying for a while that you think the Fed was too tight and needed to cut rates. Are you being political?
No, not at all. Because I'm going to call it the way I see it. I'm sure my old boss is going to be screaming when the Fed starts cutting next year. I think the Fed should cut. I think the forward-looking measures like the index leading indicators we're going to get today will be down 20 months in a row, and it's going to continue to foreshadow significant downside risks. However, the Fed changed on a dime with no data to support what they had been saying all along.
Yeah, looks like
there's something wrong there.
Kitty, do you want to tell us what really happened?
Yeah, I want to focus here on actually what Joe was just saying, that I think many of us on this screen agree that the Fed has been really slow to adjust to the data that's been coming in for the last 18 months. And largely that's, I'm actually concerned that all of this talk about politics and concern about politics is going to lead the Fed in the wrong direction. I also think that the Fed should be cutting aggressively. And we need to talk about why. So earlier I heard Rick talk about normalization. It's not just normalizing prices in the economy. The Fed has a responsibility to normalize interest rates over the long run. And it's It's actually part of their statutory mandate, Rick. They have a triple mandate. So the Fed
is supposed to have anything about normalizing. Never used the word today. Never said normalizing. Didn't say
the Fed has a sense of what the long-term normal appropriate interest rate is for economic growth and stability. And
who knows?
They
They've
really deviated from that. Excuse me, I'd like to finish.
With them for 12
Rick,
years.
I'd really like to finish. They absolutely deviated from that really, really dramatically over the past couple of years through their very, very aggressive rate hiking campaign. If they're going to treat inflation and data symmetrically, they need to be thinking about having a similarly aggressive campaign of rate cuts in order to bring us back down to a normal and appropriate level of interest rates that don't have all of these knock-on bad effects, like stopping housing construction at a time when house prices are driven by a supply shortage, like cutting off investment in the kinds of things that will supply.
How does the Fed know where rates are supposed to be?
Also,
can you tell me that? How does the Fed know where rates are supposed to be? Just curious. I thought that was something the markets did. Like, how do they know? Do they have
the markets, Rick,
December 30th, rates should be here.
The markets, incredibly, Rick, the markets want the Fed to cut much more than the Fed is indicating. So what are you saying? Is the markets political, Rick? The markets want six rate cuts this year. The Fed is dialed in 3 as an average.
The market's handicapped. Gee, our balance sheet's all the way down to $8 trillion. Where would it be if we put the $8 trillion back where they were supposed to be? Or the parking lot of reverse repos? Or all the games central bankers have played? There's no way to know where interest rates are supposed to be.
How can the markets handicap, Rick, when every Fed official has come on our air,
when
every
you put
location,
half the things
and they have said, I'm just going to
pasture.
finish here, Rick, for a second. I'll just finish. I have a very quick sentence here, which is, how does the markets handicap that the Fed is going to do more when every Fed official we've had on, from the dovish Goolsbee to John Williams in the center, saying the market went too far? So I'm a little confused as to what you think the market's making its own decisions in part.
I can't help you.
I'm not saying it's divorced from the Fed.
I'm going to get yelled at for not moderating, and I can't secretly let everyone know I love this, so I got to let Joe Lavorgna.
Yeah, I disagree with what Steve said. I'm not sure the presidents actually fully reflect the situation in the board. It's not as if, I know the New York Fed, for example, and the board are very close, but to me, this decision about the pivot was really a board decision.
How many of these guys?
Steve, let me finish. Steve,
how many of these guys are Trump officials?
Take a break. Stop. Please let me finish. I'm not on every day like you are. The thing is, the Fed,
me neither.
The board, the board, I think, made a decision to pivot. I do believe politics are part of it. We do have 4 Biden appointees that are there. And if it wasn't politics, then their forecast should have shown a bigger reduction in inflation. And it wasn't there. So the fact that the presidents aren't on board with the board doesn't mean that it's necessarily all this kumbaya moment and everybody's in agreement. I don't believe that to be the case.
I did think, Rick, and Steve and Becky and Kitty, we had Roger Ferguson on so many times. This is a quick pivot. Last time, Roger's on every 2 weeks. He's on every 2 weeks. He has not had a chance to change his very hawkish stance, and we're already factoring into. Kitty, I had one question for you. Are you an MMTer? You almost sound like you can't believe they actually raised rates. You said you didn't talk about the 10 years of being. You didn't talk about how long we were at zero, and you said this horrible rate rising cycle that they've been in. That was barely scratching the surface of the easing they've done for the past 12 years.
So actually, that's a really good point. Thinking about the idea that there is a long-term stable normal rate of interest doesn't include being at zero forever. But the Fed's rate hiking campaign was really aggressively fast. And there's a big difference between 0 and 2.5. And there's a big difference between 2.5 and 5.5. And if you look at the Fed's own projections for quite some time, they have had interest rates falling eventually back to around a 2.5% rate. The question is how quickly you move there. And, on why I've been calling for rate cuts and, the question of the relationship between what the Fed's doing and inflation, we've really seen the data is very clear at this point that we had supply shock driven inflation, which isn't at all surprising given that we just had an unprecedented global pandemic event. And that took some time to work its way through. And as it did, we saw price increases start to fall, right? And that's what many of us expected to see. That was not primarily driven by the Fed's rate increases. And I think the Fed's starting to think a little bit harder about the real problems their rates are causing.
Yeah, we got to go, though, Steve. I'm afraid to.
I just think we need to make one point, which is that 3 of the Federal Reserve governors, all of whom voted with the current policy, were appointed by Trump, including the chair. So the idea that there's some Biden or Democratic majority out there is just not accurate.
Although the only thing I would say, Steve, just getting back to what Joe said.
Joe was there when these guys were appointed.
Yeah, but Joe wasn't saying it was the Democrats trying to do this. It was almost the Fed trying to not look political, which I don't, just saying we don't want to be starting a campaign in an election season because it looks like we're political. Maybe they feel like this is what they have to have happen. It's not the same as like some Democrat conspiracy.
You know what? It's hard to make jobless claims interesting. And even our old producer, Max Myers, is saying this was the best jobless claims ever, bar none. And if we show those 5 again, I mean, look at Lavorgna's outfit. You're Donald Trump. I mean, you just are. You got the red tie.
You're missing his pants.
Yeah,
he's got Christmas pants on.
Kitty, you represent that side well. And then we got Rick and Steve. I really liked it.